The LC mechanism under UCP 600, we have terms called negotiation, which is advancing or agreeing to advance before the reimbursement is due to the nominated bank. We also have prepay or purchase under same UCP 600, which also enables a nominated bank to prepay before the due date or maturity. These two look similar, but these are all explained in UCP 600. We'll see what it is and why there is a difference. And beyond these two, we have one more thing, which is discounting. This also works similar. Here also, the bill will be paid upfront, but the reimbursement will be received on maturity. Here the concepts, the basic concepts for all the three terminologies remain same, which is paying upfront, paying on day one, but getting the reimbursement only on the maturity date, day 30, day 60 or day 90 based on the LC terms or based on the discounting number of days. But we'll try to understand why these three different terminologies are there. What is the significance of each of the concepts? I'm sure many of us will not have a clear understanding of this. If you go and talk or discuss with a senior most person or a experienced person in LC, they will try to explain all three, but end of the explanation you will see that they have explained the same concept for all the three. So let's see that. Now let me cover the first one, negotiation. So negotiation, there is a definition in UCP 600 which says that you advance or you agree to advance on a draft which is not drawn on the nominated bank and or documents. Basically you negotiate the draft or documents before the reimbursement is due to you, which is before the reimbursement is due to the nominated bank. You pay upfront out of your own pocket, get reimbursement on the end of the maturity or on the maturity date. So for that time period which you are financing, you will get a negotiation fee for that. Now what is so special about this is under UCP 600 we have two ways of making an LC available, which is honor or negotiation. Honor is paying on the maturity date. When it comes to negotiation, you pay upfront, as I already explained. This is very simple. Now there is a provision and already a defined concept under UCP 600, which is negotiation. And when the LC is issued under a negotiation, which means that the nominated bank is or the confirming bank is going to negotiate, pay upfront. Beneficiary is going to get the payment once the documents are clean. But the reimbursement to the nominated bank or the confirming bank will be on maturity. So this is the concept explained in UCP 600. This is more helpful when it comes to a site LC available under a negotiation. Why it is I'll explain the site under a honor. As a nominated bank, once you find the documents are clean, if it is site honor LC, you need to make the payment. In order to make the payment on site, to make this effective, you need to ideally have the issuing bank's account maintained with you so that you can debit the issuing bank's account on the day one and you make the payment to the beneficiary on the day one itself. Now the problem is when you don't have the issuing bank's account with you to debit, you need to rely on the issuing bank to remit the amount to you, which may take maybe 5 days or 10 days depending on the time zone and depending on the currency, depending on the banking holidays as well. And if there is a reimbursement banking arrangement, again you need to put a claim to them, and the reimbursing bank has to send the payment to you, which may again take 3 days or 4 days of time, or even 5 days, or even more than that. Now you paid the document on a site day one, but the reimbursement or the remit of amount from the issuing bank is going to come at a later day of the time. So you will be out of funds for a brief time period. Now, who is going to bear the interest for the funds which is out of your account? So this is the reason when you word the LC, you need to see that if it is site owner, you need to ensure you have the debit authority with you. If you don't do that, if there is no debit authority, then you ask the LC to be under a negotiation so that you make the payment upfront, you charge the interest, let the site LC reimbursement or the remit comes later. So you as a nominated bank, you will be getting the interest charge for the time period where your funds are out of your pocket. Now this is where the site LC under negotiation is helpful. Now let's go to prepay. Now prepay, this is again a definition given under UCP 600 where they say that even if the LC is not issued under negotiation, this is just a honor LC where the LC is available by acceptance or a deferred payment undertaking. As a nominated bank, if you have accepted or if you have given an undertaking at any point of time, you can prepay or purchase the documents. You can pay the money upfront, you can claim the interest fee, and the reimbursement will be due on maturity. This is not a negotiation LC. This is just an acceptance LC or a deferred payment undertaking LC where you have accepted the documents. At later point of time, you may choose to prepay the LC. In these cases, most of the time, the nominated bank will be waiting for the acceptance message given by the issuing bank. So, issuing bank will say that we have received the documents, we have checked it, it is fine and clean. So, we provide you the acceptance, stating that you will receive the amount on maturity date, on so and so date. Now, after receiving this acceptance message, the nominated bank will choose that, okay, we are ready to prepay it. The beneficiary will ideally ask, see, you have the acceptance from the issuing bank and you have also found the documents as clean, then why don't you prepay? So, there should be an arrangement covered under UCP 600, even if it is not a negotiation LC, the nominated bank can still do the prepayment, purchase the documents, and make the money upfront available to the beneficiary. Now, here they are not talking about the site LCs, but under negotiation, you can even do a site negotiation. Now, these are all the two concepts which looks very similar but slightly varied. When it comes to risk aspect, in both negotiation and prepay, the risk will be based on the counterparty banks, which is issuing bank or a confirming bank, if any. If confirming bank is available between the issuing bank and nominated bank, then the risk will be depending on the issuing bank or the confirming bank, where they will assess whether this bank is good, sound, whether there is less country risk, mitigated risk controls are there. Then they do the negotiation or prepay based on the bank's risk. Here, there is no facility given to a beneficiary to block. But if a bank, nominated bank, if they want to do, they can additionally take that as a risk control method. Most of the banks, they always do a conservative approach. Take triple or 4 times or 5 times of security measures for the amount they are lending. This is always the bank's risk appetite, or this is always the bank's way to secure their funds whenever they finance. But when it comes to discounting, this is where the beneficiary's limit will be blocked, where the bank will be giving a credit facility. The credit facility will be having different financing methods, financing options. Like we have term loans, we have overdraft facilities, we have non-fund based limits like LC and bank guarantees. Along with that, they will also give the bill discounting facility, where they may be specifically mentioning the bills from those buyers, or sometimes it will be in general. Like for 1 million, you can enjoy the bill discounting facilities. So here, the facility will be extended to the beneficiary after taking a security measures like taking mortgage, taking a hypothecation, taking corporate guarantees. So all these will be there. So bill discounting is in fact a traditional banking product which is given to the clients. This is not defined in UCP or ISBP. This is a general traditional banking concept where beneficiary or any client will be requesting the bank and the bank will be extending that as a credit facility. Now, when it comes to UCP 600 and ISBP, which explains about negotiation and prepay, it is totally different. It doesn't recommend the bank to block the limit of beneficiary. It is based on the counterparty banks, issuing bank and confirming bank, if any. Now, this is the major difference which you need to note. I hope now you understand what is the concept of negotiation, prepay, and what's the difference between discounting. Thank you.